This week, portfolio is going to shift, and there are 4 key opportunities that we want to take note of. So I'm going to share with you one by one. It's going to be a short video, but very powerful. Now, why is this week so important? Because announcements are going to be made at Jackson Hole. So you'll be hearing this term a lot. What is it about? It is about FOMC. So the Fed chairman is going to announce some important news, which everyone is waiting for. They are waiting for the fact that is interest rate going to be cut how many percent? Now, by now, everybody is pricing in the fact that interest rate is definitely going to be cut. It's just by how much. So Thursday, Friday, we can expect a lot of movements in the market because of unemployment claims as well. So let me share with you right now, there's a probability setting in the market about 75% that the Fed is going to cut rates by 25 basis points. Okay, so 0.25% down. And there's a 25% that Fed is going to cut by 50 basis points. This is what a lot of people are hoping for, because if that happens, very likely stock market is going to shoot up. Now, if you are going to Forex, USD may be very, very negatively affected, because when the interest rate goes down, that particular nation's dollar, okay, the currency is going to be a lot weaker. People don't want to pour money in to put inside the banks of that country because the interest rate is lesser. Now, what can we do as investors? Let me share with you a few key strategies. Now, the first key strategies will link to 3 points is to invest in interest rate negatively related stocks. And the first one that I've been mentioning is small cap stocks. So in case you're not sure what small cap stocks are, these are not the big tech companies that we're looking at, but smaller cap stocks, which is like smaller companies, and they can benefit a lot from borrowing money. So IWM is one of them. I spoke about this last week, and I also want to really shout out to our community, our tribe. KKJ was asking, can we buy TNA? And I do not know what's TNA, so I check it out. And TNA is actually 3 times IWM, which is 3 times small caps bullish shares. And you can see if you are very, very, I would say, positive towards this, you think that there's going to be a huge opportunity, TNA is in fact quite a good idea. So that's what I also replied in the comment. It's not a bad idea. Now, of course, there will be a lot of fluctuation, but with interest rate environment becoming better for small caps company, very likely this is going to do well. Now, second opportunity, instead of small cap stock, if you're not very sure, well, small caps company, they may go bust in case anything happen. You can also go into real estate. So we talk about XLRE, which is the S&P 500 select real estate stocks inside this particular ETF. So this ETF holds real estate stocks. So if you don't know which one to buy, you can buy XLRE. It's going to be very likely to benefit the whole entire economy in terms of the real estate sector. Now, the third opportunity, which a lot of people may not notice right now, when interest rate goes down, there are a lot of big financial institutions that is based on income funds, meaning to say they like interest rate, they like to get income. So when the interest rate goes down, where do they pour the money in? They're going to pour their money in likely into dividend stocks. So we can take a look at dividends aristocrats. In case you don't know what dividends aristocrats is, I'm going to leave a link in the video. These are big companies. They have been giving out dividends for the past 25 years. Not just giving out dividends, giving out increasing dividends for the past 25 years. And you can look at this particular list. They are giving out dividends like 9.2%, 5.7%. And right now, these are the top 7, okay? And interesting, likely some of them are in the real estate sector as well. So it's like a double good news for these companies, okay? When interest rate goes down, they can borrow more money, or people can borrow more money to buy real estate. They're going to benefit from there. At the same time, institutions is likely to pour money into all these real estate investment trusts. So these are the 7 dividend aristocrat, the top 7, okay? You can go and look at the whole entire list. There are some really solid stocks that you can look at. For example, I think Johnson & Johnson is there, Exxon is there, PepsiCo is there, okay, 3.1%, not extremely high, but you can expect some money pouring in there. And this will affect these stocks positively. And okay, finally, one idea that I want to share. Now, I want to say that this idea, not exactly something that I've been doing normally, but I would like to just share them openly. Let me know what you think. I'm going to use options to bet on Fed moving the markets. Now, what do I mean by that? When I use options to bet, I like to bet in a way that my risk is extremely low. So when the Fed is going to announce interest rate, 2 things is going to happen. Number one thing is they're going to announce a big interest rate cut. Okay, if it's a big interest rate cut, let's say 50 points, I think the market is going to move sharply. Now, if they announce it's 25 points, it's expected. If people expect it, likely it's not going to move. Now, one thing that may move the market is they say, okay, I'm not going to cut interest rate. I tell you, this is going to be huge. The market is going to crash. Okay. When I say crash, I mean it's going to fall. Okay. I shouldn't use the word crash loosely. But the whole idea is market is either going to stay flat or going to move. Well, Sean, you're talking nonsense. You're wasting my time. But let me share with you how I'm going to do that. Now, in case the market is going to move big, one option strategy we can use is this thing called straddle. So let me show you what it looks like. When we use a straddle on market, let's say on S&P 500 or on UPRO or on, I would say some of the indexes that we think is really huge, that's where we think that if the market is going to move up or down a lot, we are going to make a lot of profit. In fact, unlimited profit. And the amount we need to spend is a bit of money to buy into the straddle. So we're going to buy a call, we're going to buy a put. This you can see is about $11,000, but I'm not going to go for such a long-term straddle. I'm going to go until Friday or even Monday, right? If I go for Monday or let's say a Monday straddle, meaning you say after Fed announce, you can see the stock price will either move up or down. And that's where I need to pay a small debit, about $700. Now, we can also go for something cheaper, like we go for, let's say, TQQQ. Let's see whether is it cheaper. If you go for TQQQ, very short-term straddle, you can see it is about $300. So $300 is the amount that I'm going to set aside to bet on market movements. So market is either going to move up or down. Now, what if the market doesn't move? I'm going to lose about $400, which is something I don't like to do. I don't like to lose money. So how are we going to finance this $400 without like paying for it? It's very simple. You see, if the market doesn't move, I'll lose this 400. But if the market doesn't move, how can I benefit from it? Very simple. I'm going to use another option strategy called the iron condor on the market as well. So let me show you what the whole risk graph looks like when we use iron condor. So when I use iron condor, I'm betting that the market doesn't move. So if the market doesn't move, in case you are new to the risk graph, it will stay somewhere around this range. For TQQQ, it is maybe about, I would say $62 to $74. If it doesn't move, okay, I make money. So I make about $100. So if it moves, okay, what's going to happen? I'm going to benefit, okay, from this whole entire movement. So what I'm going to do is I'm going to sell enough iron condors to finance my straddle. Again, if the market doesn't move, what happens? Okay, I'm going to make $400, but this $400 is used to finance the straddle. And if the market moves, well, remember the $400 is, it doesn't come up from my pocket. It comes up from the pocket of me selling iron condor. And if the market moves, I'm going to lose money from this particular, I would say, iron condor, but because of the market movement, I'm going to make huge bucks. So this is the key concept. I do hope that it benefits you guys. Let me know what you think of this strategy. I'm going to test it out and I'm going to use very short-term options to actually execute this because we are going for a very short-term bet. Now, I don't really like to bet, but if let's say this bet has a lot of probability that's high and is towards my favor, why not? So let me know if you like all these ideas, if you like all these updates, and comment below what you think of these strategies. And feel free to ask me questions. If you want me to go more in depth into the option strategies, let me know and I'll see you in the next video. Remember to position size in everything you do because size is nothing. Sizing is everything. I'll see you in the next video.